Hi there, welcome to Nepi Invest and welcome to another answer and reply video where I get to answer your questions and reply to your comments to the best of my ability. And if you are watching this particular video today on the 10th of January, don't forget I'll be releasing your 2026 stock picks tomorrow on Sunday. If you're watching this video after Sunday, the 11th of January, go back and have a look for that particular video. See what companies you think are going to do really well in 2026. And when I say you, I mean as a collective group. Okay, so let's, and by the way, also be releasing a members only video on Monday morning. That will be like potential trades, companies whose charts are looking interesting at this point in time. It's not a complete list. I'll just skim through the list of companies and then choose maybe 10 to 15. Okay, so let's go to Richard Concalves, who is a member, and he replied to my video entitled The Structure of Charts. This is actually an interesting question, or interesting observation from Richard. Thanks, Nepi. It's interesting that when you gave the super supply network analysis, you didn't check the weekly time frame or the monthly time frame that appears yet to have no negative crossover. The weekly time frame is seeing the stock sitting right above the 100 EMA exponential moving average, and on the monthly time frame it's sitting above the 25 EMA. Taking it together, this could also be viewed as a consolidation of the continuing uptrend until negative cross on either time frames. And that's actually is true, and it's very important to have a look, well, mostly, well, maybe not always, to have a look at different time frames. In fact, when it comes to supply network, I do own shares in this company. It's in my super. I consider this company to be high quality. And funny enough, I only look at the weekly charts of these type of companies because for me, daily is more of a trading time frame. Weekly and monthly are more for the longer term. I do look at monthly on occasion, but I tend to maybe not completely, but I tend to focus on weekly charts for my longer, high quality holds, and supply network fits into that category. So in fact, if you have a look at the daily, and the whole reason I was looking at supply network is because you can actually, on a daily time frame, you can actually see a change in structure from an uptrend into now a downtrend. So that just means in the shorter term, a little bit weakness in the share price. But in the longer term, and I think I might have pointed this out either in this video or another one, if you have a look at the origin chart, this is a really good one. No, I just noticed this when I went from the daily to the weekly. In the daily chart, look, there was a crossover. Share price looks like it's in a downtrend right now. But if you have a look at the weekly chart, it's actually still in a beautiful uptrend. So it all depends on your time frames when it comes to these sort of companies. Now, for Origin, I probably wouldn't consider this company to be a high-quality company. So I'm more likely to look at the daily chart for this one. So it's more of a trading stock. But for Supply Network, I do actually only, maybe not only, but mostly look at the weekly chart. It was just that this was a good example of a bit of a change in structure that I could think of at that time. But if we have a look at the weekly chart, you could actually argue there is a bit of a change in structure. It's a subtle one. It's just a subtle one. So if you go back to 2020, share price of supply network was in a beautiful uptrend, and it was well behaved. The share price sort of oscillating either just above the 25-week moving average or just below. And if it fell below the 25-week moving average, that was a good buy. And that was like a 5-year period that happened. We saw the share price accelerate during 2024 into the start of 2025, found a top, and we saw almost a triple top at that point. The share price has pulled back. So you could say and argue that this is a start of a bit of a consolidation period. And I definitely can see that because there would be argument that supply network, with the run the share price has gone on the last few years, that there could be a question about the valuation of the company. Now, the other interesting thing about supply network, and I'll go to the daily chart just because you can see it a little bit better, is there's definitely a support just around $30 or just above $30. Share price pulled back to $30 or just above 30 back in 7th of April. Got to that level again on the 14th of November, and then again in the middle of December, and does look like a really nice little support level for this company. And this could be another change in structure because we have a double bottom here, and share price, if it gets above the previous highs, that could be the start of a new uptrend. So a possible two shifts in structure for supply network, and shifts in structure is just change in trend and that sort of thing. So a nice little observation from Richard Concalves. Sorry if I butchered your last name. IME also mentioned, thanks Nebby for the insights, in short to medium term technical analysis, do you generally enter with a full position upfront, or do you prefer to start smaller and add only if the chart continues to confirm the move? From what I observed in your past trade entries, it seems like you usually don't add to your positions. Could you explain in what scenarios adding might make sense, even if it's not your usual approach? It's something I'm willing to do a little bit more recently. Usually I would add, I'd have this conviction, enter with a full position, and then that's it. And then on the way, when I start to sell, I might sell half or a third, and then completely sell if I get or keep getting sell signals. But I'm starting to change this, and I'm now more willing to add to a position. And I did this recently with Micron. So not on the ASX, but Micron is on the Nasdaq. So originally I took a position in this company way back in April 2024, $108.95. And then I added, on a breakout at 275.45. Now, the reason I added on the breakout on this particular day, there was a breakout, but the reasons there was a breakout is because the company had really good results, quarterly results, and their outlook was quite stunning. In fact, probably one of the best outlooks I've seen from a company, and the share price has continued to climb. I was a little bit hesitant buying at that point because if you have a look at the weekly chart, and this is a long-term hold, if you have a look at the weekly chart for this one, the share price has just gone bonkers, and I was a little bit hesitant about buying into a position when the share price is so displaced from the 200-week moving average. And if you go through history, you can see Micron share price has generally been going up, but I was a little bit hesitant, but I just saw the breakout and I really liked their announcement, their quarterly results, and their outlook. And that's one of the reasons why the share price has kept on going up after that. But if you look at my initial position, $108.95, share price has gone up threefold since then. So that's a pretty good return. So I could have looked at this both ways. I've already got a pretty good gain from it, but I do think there's potential more upside from Micron. So this is something I'm more willing to do. Take a position, and then when I see another breakout, add to that position. I've seen this happen quite often now, where I could have added to my position. So I'm now more willing to do that. I have seen strategies before where you take positions in thirds and exit in thirds. So your initial position in third, and then add to it if you get another signal, and then another third if you get a final signal or a third signal. And I'm sort of doing that with my last trading strategy, my most recent trading strategy, which is buying potential 10 baggers, which tend to be much smaller companies, story stocks, companies that are really going to run up on sentiment and come back down on sentiment as well. And if I see or take an initial position in that company, a fairly small position, and then if I see another sort of breakout in the chart of the company, I'll add to that position. So that is one of the strategies I'm using in this particular, or one of the things I'm going to employ in that particular strategy. So something I haven't really done in the past, but I'm starting to work on that. So thank you for that. Okay, so I want to say, since I mentioned a very interesting what alpha spread analysis says about the ASX stocks best case for a few companies here. I'm a little bit hesitant to use alpha spread for these type of companies. Now, I want to say thank you to Sensei, I think it was Sensei, who got me onto alpha spread stock valuation platform. There was a special, and I went, ooh, I'm going to use this. I don't think I've logged in on this computer yet. I use alpha spread on my other computer, but it's really good. I really like this particular. We'll just put one company in here, Johnson & Johnson. Why not? It's the first company that has popped up on this list, and I just really like it. And this just goes through whether the company is good valued based off all these different type of metrics. So right now, Johnson & Johnson is a little bit overvalued. Fundamental analysis, I like what they do here. And you can actually watch some videos on how they determine the valuation of the company somewhere here. Or maybe you can only look at the videos if you're a member. Maybe that's it. Anyway, so I've explored. They have this. I like this revenue and expenses breakdown. I love that. I've seen other places or other platforms do that as well. But I forget how much I paid for it. It was like $99 or something like that. Free cash flow analysis, which I love. I love free cash flow and earnings waterfall, that sort of thing. Fundamental scores, profitability score, solvency score, Wall Street targets, that sort of thing. You can use this for any company on the ASX as well, but I tend to only use alpha spread for the bigger companies because I did have a look at smaller companies and I think it's less reliable, which is why, for instance, Hillgrove Resources undervalued by 92%, Paradigm undervalued by 90%, Peninsula undervalued by 92%. I'm not sure if I would, use those undervalued numbers with a grain of salt. That's probably the best way. Like Curve Beam, undervalued by 85%. It's a story stock, in my opinion. Really hard to put a valuation. RSG, though. Anyway, so I do like that particular platform, Alpha Spread, and I have been using it quite often recently, over the past 2 weeks anyway. So Motivational Flavio, apparently I introduced David Gardner to Motivational Flavio, and he's read his book in one sitting. It's incredible. And thanks to you, I'm following his 6 traits of a rule breaker stock. So I actually do know quite a few of these, and I do actually respect Dave Gardner, even though he's a founder of Motley Fool, and a lot of people poo-poo Motley Fool. You see a lot of people saying pretty bad things. Oh, they're terrible. All their picks are horrible. But if you delve into what David Gardner has done during his investing life, he's done really well, and he has these rules. And funny enough, a lot of his rules, many of the Motley Fool Australian people don't follow his rules at all. Maybe not at all, but they don't follow his rules. Anyway, so top dog and first mover, dominant player, that sort of thing. So prefers companies that define their category rather than those playing catch up. I sort of agree with this. The first mover advantage. There's definitely a first mover advantage, but just because someone is the first mover doesn't necessarily mean they will win. It's just a higher probability, the way I look at it. Sustainable competitive advantage, moat. I think you do have to agree with that. Visionary leadership, founders or leaders who see the future clearly. I do like founders. Intellectual property, patents or proprietary technology, network effects. Service gets better as more people use it. Yeah, network effects is really important. Strong past price appreciation. This is where a lot of people struggle. They see the share price of a company going up and up and up and up, and they just refuse to buy in because, hey, they sort of anchor to a lower price. So if the share price has increased 500%, like Micron, some people might look at Micron and go, well, I could have bought it at $108.95 2 years ago, so why would I buy it at $340? Well, that's 2 years ago, and things have changed. Things have changed, and more than likely, the highest quality companies are going to go up in price over time. Anyway, so, and you want to see that price appreciation because that's a good sign that something good is happening. The high quality stocks, share price should appreciate. That's the definition. I'm going to poo-poo Woodside right now. Some of you might hate this. I'm going to poo-poo Woodside right now, but have a look at the lack of price appreciation for Woodside over the last 20 years. In fact, have a look at the weekly chart. Yeah, nothing's happened in the last 20 years. This is not the chart of a high-quality company. And if you know me at all, you know why I would not consider Woodside to be a high-quality company. Compare that to, this is going to suck for Woodside. Compare that to just Amazon. Should I do Amazon? No, we'll do it. We'll do Amazon. Why not? Because Amazon is one of David Gardner's big success stories. He bought it a long time ago. So 20 years ago, Amazon was $1. Let's actually go to early January 2006. Amazon was $2. Now it's $2.40. So that's a 100-bagger in the same amount of time. And this is the chart of a high-quality company. Anyway, so if we go back to that, strong past price appreciation. So just because the share price has increased a significant amount doesn't necessarily mean it's worse value now. Anyway, in fact, this is often counterintuitive to value investors. Gardner looks for stocks that are already winning. Yeah, already winning. That's actually a good sign. If the share price is increasing and increasing, it's a sign a company is winning. The stock price has likely outperformed the general market over the last 6 to 12 months. Yeah. Anyway, good management, smart backing. Yep. Strong consumer appeal. This is a tricky one because not all high quality companies would have strong consumer appeal. You could say Nvidia doesn't really have that. Most people wouldn't even know what Nvidia does, yet look what it's done over the last few years. So not 100% on board with this, but I do definitely understand what they're talking about here. Strong brand creates pricing power and customer loyalty. That's absolutely true. Coca-Cola has been the prime example of that over the last 100 years. Overvalued. This is the really interesting one. So according to the media. So a great example of this right now would be 4D Medical. So 4D Medical, although I doubt David Gardner would be in 4D Medical right now, but maybe it would be. It does tick all the boxes here. And even I've saying 4D Medical looks a little bit overvalued right now. So those who are big proponents of 4D Medical might be saying, hey, 4D Medical ticks all these boxes and it's considered overvalued. I mean, there are probably some people who think it's not overvalued, but you can't. It's trading now on how much revenue? $4 or $5 million of revenue, yet market cap is like 2.5 billion. So price of sales, you can't say a price of sales of what 4D Medical has right now is not undervalued. Now, the company could see significant growth over the next few years, but someone like me might want to see that growth. We need to see that growth. Anyway, so this is arguably the most controversial trade. Gardner specifically looks for stocks that financial media and traditional analysts called overvalued. If a stock looks cheap, the market has likely priced it correctly as a low growth asset. I absolutely agree with that. A great example of this, actually not an example of this, I was going to say CBA. CBA is a low growth asset. It's not going to grow. And one of the reasons why I'm very confident that you can say CBA has been significantly overvalued is because it's not growing and the P ratio has been nearer 30 than where it should be, which is nearer 12, 13. Anyway, so that was a really easy call to say CBA is really expensive. If it looks expensive, it often means the market is underestimating the magnitude of its future growth. So there's a lot of examples of like that right now. Pro Medicus is a really good example. It looks really expensive. Even when I bought Pro Medicus, it looked really expensive, yet the share price has gone up fourfold since then. And maybe that's true with 4D Medical. WiseTech has looked expensive. All those tech companies on the ASX have looked expensive, but they are experiencing significant growth. Anyway, so thank you for that. And here is the book. If you want to buy it, here is the book, Rule Breaker. How to pick the best stocks of the future and build lasting wealth. There we go. And I have no affiliation with David Gardner or Motley Fool. VBAD has some interesting things to say about Telix Pharmaceuticals. If someone buys Telix shares right now, in my opinion, you have a high probability of winning big time. It only needs one more FDA approval to send the stock sky high. I know this is gambling, but I've now parked a large sum of money on Telix at its current share price. Is that gambling? You have high conviction. It seems like you have high conviction about Telix than I do right now. So with the share price of Telix pulling back a fair bit, probably a good thing I should do, maybe should do, is buy some more shares. So the share price has fallen a fair bit from its highs. In fact, down 60 odd percent, maybe even more than that. And I think the market is, well, the best way to say it, the market is overreacting to the downside, and that is a time to buy. I wouldn't necessarily call Telix Pharmaceuticals a high quality company. That is my problem. And I think a share price of a high quality company more than likely won't fall 60% unless it's coming off a really overvalued base. Yeah, if the company was really overvalued, and maybe Telix was, I don't think share price is going to fall 60%, unless also we go through into a deep recession and the market has a massive bear market. So that's probably the only thing. And I would like a little bit more diversification in their revenue streams. They are doing that. And I would like some more FDA approval. So I think they are moving in that right direction. And a lot of negative sentiment has driven the share price of this company to the point where I do think there might be some value. And when you have a look at the top stock picks your stock picks for 2026, don't be surprised if Telix is near the top of that list. Just going to say, don't be surprised. So there is a lot of people thinking alongside VBAD that Telix is looking attractive at these levels. I personally probably would want some sort of technical signal first, because I could see the share price dropping even further. And I don't mind buying at a little bit higher prices if the share price starts to turn. I don't mind buying at $14 if I get that buy signal, because there is a chance the share price could drop a little bit further from here. It's just a chance, or could go higher. I just prefer that little signal, technical signal. That's just me. Everyone's different, and that's the good thing about investing. We're all different. And VBAD has higher conviction about Telix right now than I do. Oh, this is really interesting. Okay, so I do on occasion have to go to my comment section of the videos because I get a lot of spam. This is probably true for all YouTube. And typically the spam comments are really easy because there's a comment and then there's almost immediately there's 30 replies and they all give a thumbs up to the comment. And they're doing something different now. What they're doing now is putting their comments in one of your comments. And Kelly Ma saw this. So what I do look for is like 29 thumbs up. This was a red flag. As soon as I saw 29 thumbs up, I went, oh, this is a spam comment. But I know Kelly Ma is a member of this channel. So I thought, what's happening here? Is this the most insightful comment in the history of this channel, including myself, to get 29 thumbs up? And then I read the comment and went, okay, no. And then I looked at all the replies and I was thinking, oh, that's what's happening here. Just someone, within seconds, someone put in a reply and everyone commented on the reply. And there was a name of a person. I got rid of the comments. That's what I do. It's very easy. I just report it. And then the comment or the person is hidden from the channel. So you can just see this Lorne Jason says, how did you pull that off? I'm trying to build my funds and prepare for early retirement, but I need a wider range of options. Is there anywhere I can get across to this woman? So there was a woman named. And yeah, so they're becoming... it's annoying. It's really annoying. I just wish YouTube had a way of addressing these spam comments. Like this one. Wow, this thread is motivated. Crazy to see how many lives she's touched. It's just so annoying. So annoying. Anyway, and what did Kelly Ma say? I was watching your previous videos since the beginning of 2025. From watching your past videos, I found you do a regular review of your trading positions. That is great. And I thought, oh, 29 thumbs up for that. That's interesting. But no. Lots of spams. Marcus Stent. Hi, Neppy. Love your work. Have become a member. Well done. And new member. Oh. There we go. Can you explain how you place a trade? Example, limit trade. And if you look at the level 2 data to ensure you get in the right price, sometimes I place an at-market trade and end up significantly higher than I want, 3 steps higher. Are there any tricks? No. So most of well, it depends. I do limits and markets. Now, if it's a highly liquid trade, so for instance, I sold out of APA Group the other day, I just put it on market. There's not going to be much change. If it's a smaller company and there might be a spread, what's a good example of a WSI? I'm not sure why I was looking at that company. So let's have a look at Western or Westar. Let's have a look. For some reason, it was the last. Oh, that's why I was talking about this company yesterday. If you have a look at the buy and sell depth, someone wants to buy at 8.5, someone's selling at 8.8. If I wanted to buy, I probably would put in a buy at 8.6 cents. Just to see if it get hits. Yeah, so you might have to be patient in that sort of situation. But if you have a look at CBA, if you have a look at the buy and sell depth, there's not going to be much difference between the first buyer and the first seller, and almost immediately your order is going to be hit. So I typically would sell on market for companies like CBA, and then I'll put in a limit order for smaller companies, that sort of thing, and just wait, see if it gets hit. Because a lot of times it will. You see a little bit of volatility in companies like Westar, and so there's a good chance the share price will be hit. Sometimes it doesn't. Sometimes it doesn't. Now, interesting you mentioned here, sometimes I place an unmarket trade and end up significantly higher than I want, 3 steps higher. Are there any tricks? Okay, so what I have seen, so for instance, if I put an order at 8.6 cents for Westar, almost immediately there'll be other people putting the orders in. Within a second, within a millisecond of my order. And you will see that a lot. And sometimes, depending what platform you use, sometimes it takes a minute for my order to get through. So like net wealth, it takes a long time for my order to get through the system. And with the algorithms we have now I think they see that, and that is why if you put an order in, they will see this order coming in and they will get in front of you. They will get in front of you. Maybe I'm being a little bit cynical, but it seems like that does happen. So that's probably why if you put in a market trade, you end up buying at a significantly higher price because people get in before you. They see. I don't know. It seems like that's happening. Anyway, so typically, I think I've already mentioned what I usually do. A bigger company, more liquidly traded company at market. When it comes to smaller companies, more illiquid, I will try to buy at a lower price or sell at a higher price and just see how it goes. I never get to the point where I'm desperate to sell or buy that I have to buy at market for those type of companies. I never get to that point. Spare eyebrows. What are your thoughts on Ubisoft? UBI. I have zero thoughts on Ubisoft. Are they a game? Are they a game maker? Is that the right way to say it? Okay, so what I'm going to do is I'm going to have a look at, where is it? Where is, oh, that's why it's called FinChat here. I should change the name. I won't do it here. Should change the name from FinChat to Fiscal AI. Okay, so UBI, Ubisoft, I'm assuming, listed on the France Stock Exchange, whatever that's called. I forget what it's called. I'm assuming they make games. Yep, video games for consoles, PC, smartphones, and tablets. So let's have a look. First thing I do when I'm first researching a company is revenue growth. Very first thing I look at, revenue growth, mediocre. We're talking about negative 3.6% in the last 3 years, 2.6% over the last 5 years, 4.7% over the last 10 years. That in itself is a little bit of a turnoff for me. Now, there could be reasons behind that. Maybe they have some games in the pipeline that could be successful, but I'm not a gamer, and I would assume that it's hard to know exactly which games are going to be successful. I would assume that is true. They might think a game might be successful and it won't, and there's another game they think might be a bust, and then it becomes highly successful. It's really hard to know what people are going to like sometimes. Earnings per share growth, negative over the last 3 and 5 years, 63.8% over the last 10 years. So maybe some one-offs in there. Gross margins, 89.8%. You should expect nice gross margins for this type of company, and operating margins 5.9%. So that's too low for me. And return equity and return invested capital too low. Well, return invested capital 13.2% 5-year average, but return equity at negative 7.1%. And P/E ratio negative 11.3. So obviously they've had some bad earnings recently. Market cap of the company 871. It's a fairly small company, so it's less than $1 billion, but they have a bit of debt. Ooh, look at the market cap, $871 million, but EV 2.3 billion. So they have a lot of debt compared to the $1.43 billion in net debt. Compared to the market cap, ooh, that's ugly. Let's just have a look at some of the financials. I'm not liking what I'm seeing. And really, the company has gone nowhere. Revenue has gone nowhere over the last 7 years, 6 years. It's gone nowhere. It was climbing before that. They have some good years, some bad years. And I would assume income has been quite lumpy. Oh, yeah, some bad years in there, some negative years, some up years. I would assume the loss of 494 in 2023 was just a one-off. But low margins, I just don't like what I see here at all. At all. So I am assuming the chart is not going to look good. And I already know this because I had a quick look at the chart. I thought this was another company. Anyway, so the chart does not look good. In fact, this is an ugly chart. Share price from late 2023 has gone from $30 to $6. So share price has decreased. What's that? Would times that by 24, 70, 75%. 75 to 80% in the last 3 years. Weekly chart. Oh, so lots of volatility in this one. You could say, looking at this, so we had this massive peak in 2008. Share price then fell. Share price then went on a really good rally from 2011 through to 2018. And now it's gone all the way back down. And maybe it's going to replicate what it did. Maybe we're at the bottom right now, but I'd probably need to see a sign that we're at the bottom. And if you go back to 2011, 2012, you actually see the share price in a downtrend and then found a floor In fact, if you have a look at the weekly or daily chart, which I probably would do for this company, I wouldn't trade on the weekly chart. You probably could see there were for some false runs. So maybe look in the weekly, but definitely the breakout happened back in 2012 at a share price of around $5, $5 to $6, which is where the share price is now. Share price high, $108. So this is not the chart of a high quality company. It's sort of more like a chart of a cyclical company. So maybe this is the bottom of the cycle. So not a fan. Although, if it is the bottom of the cycle. Ben Hutchinson. RE, the David Gardner strategy. Example of my doubt about that strategy is that in February 2025, Telix Pharma was one of those high fly stocks that looked expensive but kept kicking goals. Now it's down well over 50%. And I'm not really sure what they did so wrong. I'm not going to mention all the replies. It's just that this sometimes happens to David Gardner's companies that invested. And a great example of this is Amazon. So he bought Amazon. I'm assuming he bought Amazon 1990. It was fairly early he bought Amazon. When did David Gardner buy Amazon? It was fairly early, if I remember correctly, like 1999. No, buy Amazon shares. Shares, not buy the whole thing. What? Oh, Gardner. Sorry, Gardner. Sorry. Oh, he bought in September 97. There you go. So it's a little bit earlier than I thought he did. So he bought in really early, really, really early. And the share price then went from, say, $3, did they say, all the way up. Wasn't $5.50. Share price went to $100. The reason I know that is because I just know that. So they must have done a pretty big share split, I'm assuming. So share price went to, we'll say post share split, share price went to $5. And then share price went all the way back down to 30 cents. And he held all the way through that. So Amazon sort of is doing, or Telix is doing what Amazon did, but not to that extent, in my opinion. So Telix still fits into that framework. I'm not sure David Gardner would buy Telix, though. Not sure. Anyway. So just be aware that a lot of the companies in that David Gardner does buy into, you'll see a lot of volatility. He just keeps on holding. Just keeps on holding. Even the ones that don't do well, keeps on holding. And the whole reason is Amazon, the maximum Amazon can increase is infinite. The maximum it can decrease is 100%. So that's the maximum you can lose. But the maximum you can gain is infinitely so, which is why I'm not the biggest fan of you don't go broke by always... you don't go broke by taking profits. I don't mind that strategy for trading. But if you're a buy and hold, you won't get those massive returns if you're always taking profits, which is hard to do. But that is probably one of the strengths of David Gardner. He has all these rules, but one of the strengths of him is that he doesn't take profits. He just keeps on holding and holding and holding. So on occasion, he gets these massive winners. And also, Warren Buffett's strength is he uses that strategy as well. He just never takes profit. Well, it's not always true. But anyway, so that could be, Telix could be seeing this same sort of volatility right now. Okay. Interesting comment from Rich Christmas Cake. Interested in whether we can track the correlation between volume spikes and subsequent price-sensitive announcements. Is it possible to implement a filter to detect these relationships? I think it would make for a highly insightful watch list and a great point of discussion for the group. These patterns, which often seems to fly under the ASX surveillance radar, aren't necessarily always a result of loose lips. In many cases, they stem from broader rumors, subtle signs of increased activity, or brewing negative events. While some moves are significant enough to trigger directed trades, we often see other insiders position themselves ahead of announcement, creating a ripple effect through their professional networks. It suggests that rather than blatant information leakage, we are seeing a behavioral or informational feedback loop where even informal interactions like a morning bike ride can trigger a follow the leader mentality. If Bob is selling, perhaps we should too. I would love to do research on this simply because I have read it, first read it, and then I've seen it time and time again. You see the volume spikes before you see the price action. So volume precedes price action. In fact, a book I want to read a little bit more closely is this one. It's called, you can't see it, A Complete Guide to Volume Price Analysis. And what's a good example? There's plenty of examples. I don't have any on mine. I probably should do a watch list on this because I would like to do some research on this, particularly focusing on volume increases over, not volume spikes, so one-day volume spikes, but just one, but maybe numerous volume spikes, but just a broad or general increase in volume, and then compare that to the price. So not necessarily the relationship between volume spikes and price-sensitive announcements, but that could play a part as well. What's a good example? A good examples probably would be, so right now, a chart I'm really focusing on is Peninsula Energy. So PEN. So this is the weekly chart, and you can see the volume increasing in the weekly chart. You see really big increase in volume, particularly when the share price got to its low. And the daily chart is looking much interesting. You can see the volume increasing on the daily chart as well from September. So the biggest day on volume was the day it sort of broke out. That could have been the signal to get in Peninsula just that day. That really big volume day. I'm not sure if they released anything on that day, but this is sort of what I'm looking for. Massive increase in volume, no share price, and then you see the share price increasing. What's another good example? Placehouse Studios, maybe? No, this is a completely different one. What's another good example? A lot of the increase in volumes occur or coincide with announcements. A lot of the time you'll see that. For a great example of this is any trades, or Lumos Diagnostics is a good example of this. The big volume spike we saw on 16th of July was announcement. But what I'm looking for now is the volume before we see the price action. Sort of what Christmas cake is implying here, volume spike, and then the price sensitive announcement. But that doesn't always happen. But just a general increase in volume, and then later we see the price action. I don't know how to do that research. Sensei, thanks for all your efforts in all this, Neppy, in putting together all the stock codes of the viewers. By the way, again, you will be seeing your stock picks for 2026 tomorrow morning, 7 a.m. Sydney time. So what's that, 6 a.m. Brisbane time, 4 a.m. Perth time, and the other states and places, your times compared to everyone else. Anyway, which date exactly will the final end price be? End of ASX trading Thursday, 24th of December 2026, when most people mentally shut off for the year, or end of ASX trading Thursday, 31st of December? Well, it's the full year. The year doesn't end on Thursday, 24th of December. I don't care if people are going away and mentally shutting off. The end of the year is Thursday, 31st of December 2026. That is when the final day will be. Yep, the final day will be that date. Jason Lang. Hi, Neppy, love the show. Every now and then I glance at one of your stocks, FSA, which you bought around 6th of November. And let's have a look at FSA. So this is one of the companies I am trading now. And share prices got up a little bit. But it's a nice trend here. So maybe I should have waited. Instead of buying on that day, I should have waited for a little bit of a pullback, bought a little bit lower price. But sometimes you don't know it's going to happen. Share price is still trending up. So it's not the greatest mover just yet. This is one where I got a little bit late with an announcement. And the breakout actually happened back in July at 90 cents. Now, there's a chance that there might not be too much upside with this one, but it's one of the trades I'm doing. So I'm always focusing on these trades, but at this point in time, there's no reason to sell just yet. Anyway, you explained that this is one of your strategies called buy on news. Do you have other stocks in this strategy? Just curious. In fact, that's probably my most successful strategy, buy on news. Look for the announcement, buy on news. I would say like Lumos Diagnostics is a great example of this. And this has been a really nice example. So they released something on the 16th of July. Share price popped up 144.83% on that day. And people would be saying, no, you're too late. And the reason I know that is because people have said that in the past to me. You're too late. You're too late. you're too late. You're just too late. It's up 144%. Nah. So a lot of people will be selling on that day because they go, oh, 144%, got to take profits because this is not going to keep on rising. So I bought at about 7.5 cents or so. Share price currently at 31 cents. So a 4-bagger at this point in time. No reason to sell based off this chart. So that was just based off one bit of news. So one bit of news. Another great example, the one I always use, Neuren Pharmaceuticals. I've been following Neuren Pharmaceuticals for 10 years. 10 years, no reason to buy. And then on the December 2021, 7th, I was going to say 8th, on December 7, 2021, they had successful phase 3 trials. That, for me, was the catalyst. That was the trigger for me to buy. On that day, the share price rose 91%. I bought at $3.20. And again, people saying, you're too late. You're too late. In fact, you can see the share price had run up before this. So in June of that year, the share price was at $1.30 and I bought it at $3.20. People were saying, you're too late. Share price did not do much for about 7 months. And then the share price has gone up significantly since then. Bit of volatility in there, but the chart looks good again. So that's a 6-bagger for me. Bought at $3.20 and it's up to 19. I almost got to a 10-bagger on point. And that was on the back of news. And a lot of my trades are on the back of news flow. So if you ever hear someone saying, not always, a lot of them are. So if you ever hear someone saying, no, you're too late if the share price increases 100%, no, there's new information. There's new information. And a lot of times that new information takes a long time to get through the market. It can take months to get through the market, which is why profit upgrades is one of the most successful trades you can do. Great example of this. I know it's oh, by the way, I took a trading position Appen yesterday. Just because, well, it looks interesting. No news though, no news. But a great example of profit upgrades is Appen. Not recently. We're talking about 2017 through to 2018, maybe even before that. And here's the date. 18th of May 2017. I think that might have been a profit upgrade. They released a lot of profit upgrades during this period. Share price up 25.6%. Share price then on a really good run. It took a long time for the news to get out there. On the 30th of November, probably AGM trading update. Share price up 22.47%. Share price kept on going up. Kept on going up. And kept on going up until it didn't. Until the model was broken. Anyway, so a lot of times you will see the share price of companies go on really good runs after a profit upgrade. And if they keep releasing profit upgrades, and what I found, this is my own research, what I found that good news, the positive effects of the good news can last up to 6 months. After 6 months, there's less of a signal. And that is why if you get a run of positive announcements, the share price can keep on going up and up and up. But typically, one announcement, the positive news can last. Not always, not always. This is not 100% foolproof. A lot of times you'll see share price pop up on good news, profit upgrade, and the share price pull back. And I think a lot of times that is the market had already priced a profit upgrade into the price. The people like me buy in on the profit upgrade, and then these people who bought on the belief that there will be a profit upgrade, they start selling, push the share price down. So yeah, so anyway. What's another example? Dusk. Oh, this is a good one. Dusk. They listed late 2020. They listed late 2020, November 2020. On the 29th of December. Oh, this is a good reason why you need to have the stock picking all the way to the end of the year, because Dusk released a profit upgrade on the 29th of December 2020, and I bought in on that. Share price up 12.8% on that day. And look what happened to the share price after that. Share price more than doubled in the next 7 months. 7 months. And the share price struggled after that, 7 months. So 6 months is sort of the time period I'm looking for those sort of events, for a hold anyway. I do prefer a year because of tax reasons. Jason Lang, hi Nippy, love the show. Every now and then I've already talked about that one. Kusha Punter, could you, okay, I've already done that. A few comments in relation to adding timestamps. Reese M. Hi, Neppy. I have held a dog stock. CLA. Celsius. Is this Celsius? I could be wrong. For a while now, wondering if you could have a little look and get your technical analysis on it over the next couple of months. Well, for me, technical analysis isn't about predicting where the share price is going to go. It's just about the probability of it going up or down. So technical analysis isn't about absolutely forecasting the movement of the share price. It's all about probability. And a lot of people don't understand that. I've seen comments in Facebook groups when a company share price has popped up 50% in one day. Well, technical analysis didn't forecast this, did it? No. Well, no, it's not forecasting those sort of things because it's not a predictor of the future. It's a sort of more like a probability of what might happen. So 50% versus 30% or 60% versus 20%, something like that. Anyway, expecting finance this month and some volume today. K23 man says, actually, we'll see. We'll have a look at the chart first. Is this Celsius? It is Celsius. I don't know why I know that. Oh, that's the wrong. Must be dual listed. I don't know why I know that. I must have looked at this company many years ago because I can't, well, many years ago. I don't know when. Maybe 2020. Share price went on a really good run at that point. And I haven't looked at it since because I can see why. Share price has been as low as 0.6 back in August. And chart doesn't look half bad. In fact, look at the volume. Look at the volume back in March, April of 2025 when the share price hit its lows. And then when the share price started to rally, some more really good volume has coming through. So share price, the chart looks okay. I would say there's a lot of shares on issue with this one. Just by looking at this, there's a lot of shares on issue, maybe 2 to 5 billion shares. I could be completely wrong. 3.24 billion shares on issue. Yeah. So the reason I said that is you could just look at how the share price acts. So there's a lot of pip traders here. So if we have a look, at the buy sell depth, there's going to be a lot. Yeah, look at that. Lots. So there's a lot of pip trading happening with Celsius, which I'm not the biggest fan of. So market cap of the company is 48.6 million. So that's one negative thing about it is that a lot of shares on issue. Now, 3.24 billion shares on issue is not that negative if you have a lot of value. If your market cap is $1 trillion, it doesn't matter because NVIDIA probably is a prime example. How many shares on issue does NVIDIA have? Let's have a look. I don't know NVIDIA. I would say in a many billion. 4.49, no, wait there. 23.35 billion. Yeah. So it's not bad for NVIDIA, but it's bad for a small company to have a lot of shares on issue because when the share price gets to like below 1 cent, it's just a pip trader heaven. I don't know if it's a heaven, but pip traders love that for some reason. I don't know. Well, of course I love it because that's the whole definition of pip trading. Or okay, so I don't know anything about Celsius. I'm assuming this is just a exploring company. You mentioned getting financed soon, corporate presentation, AGM. Hopefully they've mentioned something in this. It's just not how to vote or how. Yeah, a lot of these presentations are just how do you vote. But it looks like building the Philippines' next copper gold mine. They're in the right space. Now, this is a good presentation, yeah, because they're talking about a little bit about the company and there's no how to vote silliness in there. Okay, so I won't delve deeply into the company. If you have a look at the most recent Appendix 5B, you want to know if they're going to do a capital raising. Have they done any capital raisings recently? I don't see any. They've appointed a financial advisor. That's interesting. When are they? So they mention here advancing toward operational readiness. That's interesting in itself. But when I'd like to know their timeframes. You know, I'm not going to do research now, but I would say they have not a lot of cash on hand. They're spending a lot on exploration and valuation. Proceeds from borrowings, so $3.1 million of cash on hand. And they've got debt of they have debt, but $6 million of debt. There we go. Yeah, so based off that, not the biggest fan, but the chart, I don't mind the chart. I could put this into my, since I've looked at them, I'll put this into my copper. Are they more of a copper or gold company? Put into my copper watch list. Why not? And the chart doesn't look bad, but I just don't like how there's a lot of shares on issue and it's a pip trade of heaven. But the very fact the share price got to 1.6 has pulled back a little bit to 1.5. If you get it to 1.3, that might be okay. But it does look like the share price is moving to an uptrend. And K23 Man says, just broke through resistance at 1.5. Chart looking positive. This one has been getting some attention on X recently with people saying it's undervalued. I've already also seen some concerns about the quality of management. Yeah, all those things I know nothing about. Yeah, 1.5. I could definitely see why someone would say there's resistance at 1.5. All you have to do is go back further than what I had. And if you just draw a line about there, yeah, 1.5. It did get above 1.5 back in March 2024, but definitely there is a bit of resistance at that level. Share price is right on 1.5 now. But if I was looking at the shorter term, so we saw the share price go on a rally, pull back, got another rally, another little pullback is okay. But chart definitely looking better. Reese says, gross negligence might be the word you're thinking of. I remember this, talking about, who was it? Had someone die at the mine? Oh, it was Coronado Global Resources. Had someone die at the mine. I couldn't think of the word. Gross negligence, is it? If it was gross negligence on a part of the company, that's bad news. But more than likely it's not. And let's have a look to see what happened with the share price of Coronado. So in my opinion, the market overreacts to news like this, and that's the time to buy. I did not buy shares in Coronado, and exactly what's happened. This must have been the 5th of January. Share price went down 11% on that day. The next day, share price rose 15.6%. The share price is now higher than it was before. So I've seen this now a few times where the market overreacts to news like this. And that's the saddest thing, that a death overall, in the scheme of things, isn't that important. 100,000 people die per day. That's life. 100,000 people in the world die every day. Is that true? Or did I make that up? How many people die per day? It's probably somewhere. Oh, I was understating it. 150,000 to 170,000 people die per day. So 1.7 to 2 per second. Geez, there's a lot of people on this planet. And the funny thing is, when someone you know dies, it's very impactful. Very impactful. It's it's one of the most significant moments in someone's life when your family member, your mother, father, sister, brother, your child. If your child dies, that's going to be the most impactful day of your life. But for the world at large, unfortunately, like when my dogs die, it's going to be really impactful for me. But for everyone else, you watching this, it's going to be just won't even be a blip on your radar. And that's life. Oh, this is a really long comment from Ben Hutchison. Oh, Ben Hutchison doing some research. So the great thing about this comment isn't exactly what he said about Odeira and IME. It's that he did for the research. The way I look at this is I'm pretty knowledgeable about the market at large. So I know about a lot of companies. So for instance, Celsius, I just knew CLA, it's Celsius, but I don't know much about that company. And I think one of the strengths a lot of you have is you know a lot more about some of these companies I talk about, probably way more about these companies than I know. And in fact, the sad thing would be when I talk about a company, there'll be one listener who knows a lot more about that company than I do, and I might be making a fool of myself. That's it. But my strength is I know a lot of companies, but my knowledge on every company is small. And there's going to be a lot of investors out there who know much less about all these other companies that I know a lot about, but they know a lot about one company. In fact, I used to think it was really strange that you watch Ausbiz Call or you listen to an expert and they get asked about a particular company and they'll say, I've never heard of this company before. And I used to be going, how have you never heard of this company before? What are you doing? What are you doing? But they know a lot more about these other companies, a lot more about these companies than I know, but I know more general, more broad knowledge, if that makes sense. So, for instance, Odeira, I heard about. IMEXIS, I do know this company, but not a lot. And I wouldn't be able to tell you if we got into an elevator what the company does. Anyway, Ben Hutchinson did some research on these two companies, and he came away impressed by Odeira, which is interesting because this chart, and that's the whole reason I started following this company a little bit more closely. This chart was looking interesting. We saw some spikes in volume. Share price has pulled back a little bit recently, down to 5.6. So maybe a buying opportunity for Odeira, just based off the chart. And this could be one, as Ben mentioned, this could be a mythical 10-bagger, only valued at $11 million. Definitely could see that happening, maybe. And the other one was IME. I don't even know how to pronounce it. And the chart does look better, but the volume recently has been really low, although that could be just the time of year. Anyway, thank you for that comment, Ben Hutchinson. And if you want to know more about those two companies, have a look at his comments because it's quite long. And I love these sort of comments. So if you want to put more in-depth analysis on a company you know, there's a guy about 4D Medical. I forget who that is. I love that this guy loves 4D Medical. If you know more about a company, put your thoughts in to the comment section of the video because it helps us all. Michael Dio, good first name, a strong first name, a brilliant first name. Can you have a look at GGP chart? Looks good at the moment, but was out of trading for many years. I believe GGP was a recent listing. Greatland Resources, if I remember correctly, because I looked at this company recently. They had a production report for the quarter, and the chart looks spectacular. Wonder what they released. Why did they have share price go down on the 29th of July? That was a pretty negative reaction. Down 24%. It was a negative reaction, but it wasn't that powerful because the share price has gone up significantly since then. Anyway, beautiful chart. I think that's all I can say about Greatland Resources. And according to this, yeah, they are a recent listing. Let me just confirm that. Now, I could do this two ways. I can go to Market Index, and we'll just have a look at all the announcements. Here we go. Mission quotation on 23rd of June. Maybe this has another history. Maybe they were on the ASX many, many years ago, but I can't remember Greatland being on the ASX. But anyway, chart looks good. What can you say? And if gold prices keep going up, there's a good sign. I shouldn't say it's a good sign that Greatland will keep on going up. But if gold prices keep on going up, more than likely, Greatland Resources share price will keep on going up. Kelly Ma says, is it too late now to put Rocket DNA as a 2026 pick? Yes, it is. However, I like this chart. Rocket DNA broke out on Thursday. It's a nice chart. Look at the volume as well. Look at the volume. Nice volume increasing. So broke out above 2.8. Could this be my risky, what I call it, possible 10-bagger portfolio? This could be my possible 10-bagger portfolio. In fact, I should write it down on my little list of paper. I have a little list of companies that I'm close to trading. And Constellation Software was here. A few other companies like Charger, Austral, VMM, Viridis. Appen was on this list. I took a position in Appen yesterday. But other companies that are on this list, I haven't took a position in. Ben Hutchinson took profits on APA today. It looks like some lower lows formed since early December. And someone also mentioned that APA went ex-dividend. And the way I look at APA Group is you get a nice dividend yield, but I don't think you're going to get a nice capital return. And for me, it was just, they went ex-dividend on the 30th of December. Share price down 3.3. Now, I expected the share price to start going up after that. That's what happened in June. Share price dipped when they went ex-dividend, and the share price started to go up again. But it didn't happen. And then the big down day on the 6th of January, down 2.88, that was sort of the negative day for me. That was sort of the day where I went, yeah, I'm going to sell out of this APA Group position, took profits, and the dividend. I had a nice dividend. In fact, I would have had two nice dividends with APA Group. What's the dividend yield? 6.83%. So I would have had a 8% dividend on top of the 10% capital gain. But these sort of companies, yeah, APA Group, AML, no, Ampol was another one I took profits with. Share price up 10%. I went, yeah, I'll take profits. We had a little bit of a dip. I'm going to take profits with this one. I don't think you're going to get much capital returns out of these. So I thought, nah, I'd rather put my money to different use. Okay. Designation 8 says, can you have a look at chart and trends of Nova Eye Medical Limited? I, really obvious and the best ticker code. Nova Eye has ticker code EYE. I. Is it in your portfolio or plan to add it soon? No. No, it's not in my portfolio. And I can't say at this point in time, no plan to add it soon, but doesn't mean I won't add it soon, particularly if the company releases something really good. So let's have a look at the chart for I. So this one could be, maybe I'll have a look at the chart right now and go, ooh, this looks interesting. And not for me just yet. Not for me just yet. Now, the share price was at 15.5 cents, was at this level not that long ago, talking about September, October. So there will be a bit of resistance. Not a lot of volume coming through. Market cap 42.72. I believe this company does release pennies 4Cs. Yep, they do. Let's have a look at the most recent pennies 4C. Would this be on my watch list in terms of quarterlies to look at? Getting close, getting close. Receipts up to 8.3 million, operating cash flow negative by 798,000, but it would be over $1 million because of government grants and tax incentives. So maybe getting close, but not quite there just yet for me, just based off their financials, but maybe getting close. But chart, I need to see something more on the chart. Let's have a look at the weekly chart, by the way. Ooh, look at that weekly chart, long-term downtrend on the weekly chart. They weren't I before. I'm pretty sure this company was something else. Let's have a look. I'm a little bit curious now. Sometimes the curiosity gets the better of me. Chinese stocks just broke out. Here's how Aussie investors can play the move. Ooh, okay, let's go back. Let's go back a few years. Let's go back to 2020. Let's have a look at one of the announcements. LX. Really? Was this LX? ELX. LX Medical Late. Is that right? I don't know if that's right. I do remember that company, but anyway. Men Frig Berthable. I'm invested in Halma for a couple of years now, a really great compounder and my best position with 75% up. Valuation is a bit high at the moment, but if you can hop into it at a fair valuation, it's an awesome business model with excellent management. So this is one of my back to videos I released during the 2 months I was away, and I completely forgot about some of these companies. So let's have another look at Halma. I won't have a look at financial look. We'll just have a look at the chart for Halma, London Stock Exchange. If you have a look at the weekly chart, it's the chart of a high quality company. Bit of weakness back in 2021 to 2023, probably because of interest rates rising, but this is a brilliant chart. If you have a look at the 200-week moving average, yeah, to buy this one, the best time to buy this one was when that weakness a few years ago, and yeah, share price is up. Almost at record highs, market 13.7 billion, P ratio almost 40, which might be a little bit stretched for this company. I don't know. But yeah, Halma is one of those companies I looked at and I've almost completely forgotten about. But thank you for reminding me about that company. Men Frig Berthable. Okay. Oh, Nyrada. This was an interesting one. Hutcho. I was in Nyrada, first heard about them through Tony Lacantro. Yes. I was trying to think of his name the other day. How did I hear Nyrada? And it was Tony Lacantro. He used to go onto a small cap podcast. He hasn't been on that for a while. He used to do that every 2 weeks with the woman, I forget her name. And he's very much a mining exploring analyst or expert. But on occasion, he'll throw out these biomedical companies like Nyrada. And that's the first time I heard about Nyrada. And the share price of Nyrada has gone bonkers. I'll talk more And someone else might be talking more about Nyrada next week. So look out for a video where I, alongside a possible guest, will talk about Nyrada. Not a possible guest. That's why I say that is a possible video where I do have a guest. We'll talk about Nyrada. Hutcho's wife has Findy. So this is a family, a husband and wife who are trading. Is that right? Trading or investing? That'd be brilliant. If I could find a wife who loves to invest. I just don't think there's any women out there who would take me. Anyway, so I'm always drawn towards biotechs with regard to the brain. I bought in 2024 at 7.8 and did nothing for ages. Then 3x pretty quickly, so I sold. It went on to 15x. What do you do? His next pick is Northern Minerals. So Hutcho is really on Northern Minerals. In fact, I think there's another comment from Hutcho in regards to Northern Minerals. So this is another case where someone has really high conviction about a company, way higher than I do. So Hutcho has high conviction about Northern Minerals. Heavy rare earths play, Chinese linked capital, doesn't employ easily, and it definitely doesn't fight to stay in unless it sees real value. Geopolitics, scarcity, ownership, tension, worth watching. Hutcho is half Asian. I'm half human. I don't know where the other half comes from. Anyway, let's have a look at Northern Minerals. Just the chart. Ooh, weekly chart looks ugly. Daily chart. Oh, there was a lot of interest in this company recently, wasn't there? Oh, share price just went bonkers on the up 42% on the 14th of October. Now, unfortunately, the next day, share price dropped 14% and there wasn't any recovery. Share price dropped all the way back down. I think the bottom might have been reached middle of December at about 2.7 cents, but market 314.96 million. This company must have a lot of shares on issue. The share price is 3.2, market cap is 314. If you do simple maths, we can see that this company must have, I want to say 10 billion shares on issue. Is that right? 10 billion shares on issue? 9.54 billion shares on issue. Yeah, that's a little bit too much for me, but anyway, did not expect a market cap of $305 million. But again, very important. Conviction is very important. I tend to not develop any high conviction, no matter what. That's knowing myself. I never develop high conviction. Kalimar says, St. George Mining, interesting charts, rare earth play. This was a company that popped up a fair bit quite a few months ago. And Ben Dwyer says, how's a grade? Mount Weld, ESQ. So let's have a look at St. George Mining. Is this SCG? Is this why I know this company? Is it SCG? No, that's Centigroup. Maybe SGC. No. What is SGC? I should have known St. George. No, I should have known SCG is Centigroup. St. George. They have a ticker code that SGQ. Yes, SGQ. Okay, yeah. Definitely a few months ago, this was on my radar because the share price, the chart was looking beautiful. It wasn't an obvious breakout. Share price started to move up higher back in June. And then there was a big update on the 29th of August, up 15.38% just before I went away. And the share price just went up. I probably went up way too quickly and too much, went from 4.1 to 18. So after that sort of run, you're always going to see a little bit of profit taking. Profit taking has come in. I think the profit taking has come to an end. And it does look like the share price wants to go higher from here. And we did see a decrease in volume during that dip. And we've started, can't really say the volume has started to increase. The other problem is we're in a quieter period of the year. So naturally, you're going to see a lower volume. But the volume has subtly picked up recently. We'll just say that, subtly picked up. So Kelly Mars says, interesting chart. I don't mind the chart. Another company with a very high market cap, $400 million. Shares in issue, 3.31 billion. Funny enough, I could have seen the shares in issue for Northern Minerals on a trading view. Oh, no, it says 5.77 billion. Different. Okay, let's move on. Oh, Rogodorn says something really intriguing. I never really thought about any of this, that there are, I don't know how to call it, these groups who own a lot of companies or back a lot of companies. And he mentioned HCF is an interesting one. They sold all their assets to HNG, which I believe is Hancock and Gore. Could be, am I wrong? Hancock and Gore, yeah. And the reason I know Hancock and Gore is they sell uniforms. I think it's school uniforms. It's the only reason I know Hancock and Gore. They sell school. Well, one of the subsidiaries sell school uniforms. Anyway, and now it exists as a shell, which shells used to be all the rage back in 2016 during the bottom of the mining cycle. So a lot of mining shells, mining exploring shells, and we saw a lot of companies backdoor their way onto the ASX through these shells. So that could happen to HCF. So Hancock Gore being one of the companies which has Sandy Beard as a chairman and who acquired Mount Castle in 2023. And I think Mount Castle is the school uniform. Am I right? They're the oldest manufacturer. Uniforms, yeah, school uniforms. Anyway, let's move on. He's also on the board of FOS, that's the light, BRI, which is Brisbane River, no, not Brisbane River. I always do that. Big River. I just see BRI and immediately go to Brisbane River. Big River. AN1 Anagenesics or something. AN1 Anagenics. And HCF. I don't know HCF. I have no idea what this one is. H and G high conviction is probably why. He's watched, Rogaldorn has watched FOS for ages based on the videos, but was put off investing from hot copper comments highlighting the cross-trading that occurs across these 5 companies and the appearance of a virtual fiefdom. Good rabbit hole to go down when you've got a free day. Thank you for that, Rogaldorn, because I've never... Yeah, this is completely new to me, and that's interesting if there's a lot of cross-tradings between these 5 companies. Could you say that's manipulation? Don't know. That's really interesting. And he also mentioned there's another one, Richardson Street group of companies backed by Bellevue Gold founders Steve Parsons and Michael Naylor, named because their company offices are all on level 2, 8 Richardson Street, West Perth. So Bellevue Gold, Firefly Metals, ASL, which is Andean Silver, CY5, MM1, BVR, AQI, and possibly OCN and XRA, which quite a few of those companies I don't know anything about. So thank you for that insight. Very intriguing. Rogaldorn. Am I saying your name right now? I don't know. Adrian. And I'm sorry, whenever I see the word Adrian, I just think Rocky. That's terrible. Hi, Michael. CCP is a stock that has been frustrating me for a while now and unsure whether to sell or hold in the event of a possible turnaround. Any analysis would be appreciated. So I can't give you any advice what you should do with your shares. It's up to you. It's up to you. Take ownership of your decisions. It is the most important thing you can do in life. And not only investing life, your life overall. I've seen a lot of people. In fact, I was looking at a Facebook comment in, I think it's ASX Beginning Investing. So on occasion, a company will sell unmarkable shares or something. And this person was complaining, I had no notification. This is going to happen. My shares were sold with... No, you get notified. I just wanted to write a comment. You get notified. Instead of blaming anyone except yourself, blame yourself because you would have got notified. You would have been notified. I think it was called lithium. I forget. Yeah, completion of small share sale facility, 22nd of December, complaining, oh, my shares were sold. Got no notification. You get notified. Don't blame Core Lithium. Don't blame the ASX except yourself. Anyway, I've gone on a bit of a rant there. Take ownership in your decisions. Take ownership. Don't blame other people. Jeez. Anyway, I'm not saying this about you, Adrian. Anyway, it just popped up in my mind. I saw this comment on Facebook this morning. I was like, ugh. Anyway, Credit Corp. This is one. Credit Corp, if I remember correctly, Credit Corp had a really bad time during the GFC. Let me just confirm this. Oh, yes. I don't know if, yeah, share price went from $13 all the way down to a low of 40 cents. And I'm just wondering, it must be a completely different company now, but the chart, the weekly chart doesn't look good. In fact, the weekly chart, I put in a purple box for some reason. The weekly chart looks really negative right now. That's the weekly chart. That's a different time frame. The lows, if a share price got to $8, I might be interested. That's the COVID-19 lows. That's like maximum negative sentiment in this company. They collect debt. I'm not sure if collecting debt is way harder to do during bad times. I would assume it is. Why would you want to give your money to a debt collector if you're, and living, if you're going through a cost of living crisis? Is debt collecting really hard? I don't know. Chart is probably saying yes. That's the weekly chart looking weak. Daily chart looks horrible. Looks like the share price did pop up when they released results. The market liked their results, but this is a case where the market reacts on results and then it just peters out. So not all results or good reaction results turn into good trades, but there was resistance. It got to resistance level, and I'd say a lot of selling happened on that pop-up. And the share price and the chart doesn't look any good. So I think the question for you is, what's your time frame? What is your time frame with Credit Corp? Are you willing to hold it for the long, long term? Do you think the share price will go up in the next 5 to 10 years? Or is it just a trade? If it's just a trade, probably my question would be is, why are you in it? Ben Adler says, what is going on with EZZ up 46% in a week on no news? 2 years ago, it first broke out as an undervalued earnings machine. Has it now become a day trader stock? I saw this the other day and I went, what the heck is going on with EZZ? What is going on? Share price pulled back yesterday. But yeah, this is just, I have no interest in this. So this was a great trade. This was a beautiful trade. So early 2024, all the way through to late 2000, well, only like a 6-month trade, really. Yeah, 6-month trade. Share price went from 70 cents to $5. And the share price is pulled all the way back. So this is a case where you don't go broke by taking profits. So this is sort of like a half-half. So a lot of people would have seen the share price go up 20% and take profits. No, ride it as long as possible. So this is a case where I did ride this as long as possible. And when the trade started going against me, I took profits. I still own a little bit of shares in this one just because I think there's some value in it. And I think, but at this point in time, I wouldn't even think about trading this. And too much volatility right now for me to be confident which way the share price is going to go. But what's going on? Did they get a price query? They should have got a price query. They should have got a query from the ASX. If they didn't, something is wrong. Something is wrong. Share price in a few days went up. Let's have a look. Share price in a few days went up 70%. That's a price query waiting. And the volume was higher as well. Anyway, so yeah. I just wanted to mention this from Ben Dwyer. So I did take a trading position in Viridis Minerals and Mining, where it's called, VMM. And then he's given me some insight, some extra information. So more information than I know. So I love these sort of comments. So if you do have a company that you like, just write down its serial code and write down why you like it. And if you do that, I will probably have a look at the comment, and other people have the chance to look at the comment. So this one is about Viridis Mining and Minerals. I might have got that wrong. Mining and Minerals, I got it right. Might have said Viridis Minerals and Mining, but anyway. So I took a trading position in this one. I'll show you the chart in a second. But Ben Dwyer says Colossus hosts, he's mentioned the second last bullet point. So they did release something the other day. So was it this one? Secures funding? Oh, yeah. So the last highlight, there's a lot of highlights section in this one. Anyway, I'll just go to his comment. Colossus holds the highest grade and largest known Western resource of the 4 key magnetic rare earths, including the critical heavy rare earths, dysprosium and terbium, underpinning robust project economics across cycles without reliance on artificial or sustainable floor pricing. My next step here would be to Google dysprosium and terbium because whoosh. Anyway, this is a true early retirement potential stock at the current modest market cap. This mine will operate for 30 to 40 years once the plant gets built and will spit out key rare earth elements in the bottom quartile cost globally due to ease of extraction from soft and shallow clay deposits in an already established mining jurisdiction. So this is a potential 10-bagger. This is what I'm looking for. But again, Ben Dwyer has more knowledge on this company, has higher conviction without doubt than I do have, and that makes a difference. So Ben Dwyer is confident about Viridis Rare Earths. So that's not Viridis Mining and Minerals. So let's have a look at the chart for this one. So this is a case where the share price went on a run, really strong run. Share price pulled back, fairly stark pullback, and that is a problem, maybe not the problem, but that is what you'll see in these sort of companies. You'll see a lot of volatility. Share price pulled back. Share price pulled back almost 60%. But the share price popped up on the 22nd of December, and the share price also popped up on the 6th of January. But after the 6th of January, and this is one of the reasons I took a position, share price went sideways, and I can see the share price going on another run. So it's in my one of my trading portfolios right now. The other thing I should mention, I think I mentioned this earlier, VMM, Bell Potter is confident on this company. It was mentioned in their stock picks for 2026, which was unusual because this is way more of a speculative company than they usually put into that report. So yeah, that was interesting when Bell Potter mentioned this company. He actually put this company onto my radar a little bit more. Just acronym. Temple Webster is less than honest. Website list as brand A, receive brand B, and then you got to apply from customer support. Okay. So we like to clarify that this product is part of our white labeling practice. This means we source high quality generic items from trusted suppliers and rebrand them under our own Temple Webster name. While the supplier's brand may appear on the product itself, the listing reflects our branding approach to maintain consistency across our range. Okay. Temple Webster. I still don't understand why people buy furniture online. Maybe I'm just a fuddy-duddy. And the other thing I will say is I don't like to buy like branded names like Temple Webster. If Temple Webster, I just wouldn't do it. Like I'm looking at TVs now because when I move into my new place, I'm going to spend $30,000 on landscape and furniture, and I want to buy a really big TV. I have not bought a big TV for 20 years, and I was doing research on TVs, and the first thing I realized is don't buy any branded TVs. When I say branded, I mean Kogan TV or Apple TV or whatever TVs are. And so I'm thinking between LG, what's the technology called? I did write it down. Jeez, can't believe you have to do research on TVs. OLED, which LG is a leader in that space, and then LCD, like a mini LED, QLED, like Samsung, but more than likely OLED from LG because they did develop that technology. And apparently that technology is amazing. I did hear someone say, when you watch a TV like in a darkened room, which my room will be darkened, my media room, when you watch an OLED in a darkened room, it's like a religious experience. They're probably overstating it a little bit. But anyway, Temple Webster, I still don't understand, but my parents bought some stuff from Temple Webster. So maybe I am a fuddy-duddy. But when I buy furniture, I just like to see it in store and I'd like to touch it and feel it like a bed, like to lie on the bed or the mattress. There's no way I'd buy a mattress online. But I probably said the same thing about running shoes. But initially, I'd know exactly which one of shoes work for me, like Brooks, different types of Brooks. And I can buy those online because I know they're a perfect fit. But when I bought some hiking shoes in the United States, I had to go to the store and try them on. Anyway, chart for Temple Webster looks terrible. They did release something negative a while back ago. Must have been the AGM, and the share price and the chart looks pretty bad. But the valuation of this company is one thing I just don't understand. $1.54 billion market cap, P ratio 141.69, fairly low margins as well, if I remember correctly. But yeah, not the sort of company for me to hold long term. More of a trading stock, and I have traded this in the past. Definitely not now, though. Thank you for that just acronym. Kelly Ma, Firebird Metals, close to a breakout. I love these sort of things as well, these comments. This company is close to a breakout. So let's have a look at Firebird, a company I don't know anything about, except they employ firebirds to melt the metal. Oh, hello, Firebird Metals. Okay, so Kelly Ma is right. Did they release anything? Cleanse? No, they haven't released anything. Change the directors' interest notices. Have the directors bought anything? insiders buy some shares on market. What I look at always is these look like they're just options or something, or ordinary shares. How do they buy them? Nature of change, shares, participation in placement. Okay, participate in placement. That's the one thing I look for. How do they buy them? So if you see on market trade, it's on market trade. Anyway, Firebird Metals. So it listed in 2021, share price went down a lot, and now it's might be going on a run. I'd put sort of like, in fact, this is a case where I might put, if I can find it, here it is, a rectangle. I might put sort of like a rectangle. And that rectangle is sort of like a resistance zone, because we saw the share price get into this zone back in September 2023, May 2024, briefly in September 2025, and now it's in that zone as well. So for me, it needs to break above that zone for me to really confirm this is a breakout. But it is looking good for Firebird Metals. We've also seen a nice increase in volume, subtle increase in volume, but I am assuming this is copper gold. I think you can't go wrong with those, but let's have a look at the most recent. Let's have a look at their presentation. They mentioned cathode or something. So I would say this is not gold copper. This is something completely different. Take your time, Comsec. We're no rush here. Got no cricket on today. Concentrate to cathode, advanced lithium manganese battery materials developer. I do like their logo. Is that their logo? Firebird? Actually, not pretty nice. Shift to manganese rich cathodes. It's different. I'm going to leave this up so I can actually have a look at this company a little bit more in my own time. Thank you for that, Kelly Ma. Hacho. Oh, yeah, Hacho. I knew Hacho mentioned Northern Minerals in another comment. So he's in our city and patient for years now, hoping for a breakout on the back of some good news recently, and still heavy on Northern Minerals. We already talked about that. Some insanely smart and wealthy people I know on that ship. Now, in saying that, just because some smart and wealthy people are on it doesn't mean it's a sure thing, because Isaac Newton, and I would say Isaac Newton, the greatest scientist we have ever seen. And if anyone debates me on this, I'd like a good debate. Isaac Newton is the greatest scientist we have ever seen. Yes, surpasses Einstein, that sort of thing. Because in a short period of time, Isaac Newton developed calculus and all these great things. Calculus is one of them. All these great things in a few years. I believe he was locked down. There was a plague or something. Made all these breakthroughs in a few years, including calculus. Revolutionary breakthroughs in physics, mathematics, optics between 1664, 1666, and calculus, optics, gravity. He was fairly young, maybe in his 20s, but that's sort of normal. And I believe he was history's greatest scientist. Yeah, greatest scientist, without doubt. Calculus. He invented calculus, for freak's sake. Jeez. Yeah, that's alongside all these other things. A lot of people don't know that. He invented calculus. Anyway, the whole reason I was mentioning Isaac Newton, lockdown, I want to say lockdown in outbreak. I have a feeling he was locked down. Yes, it is true. Caused by an outbreak of the bubonic plague, yeah. So he's locked down. So it's really interesting. I'm going to go on a bit of a tangent here. So a lot of people are saying that there's a belief that with the like mobile phone, social media, that sort of thing, that creativity is really going down. We need to be bored for our creative side to bloom. And that's probably what happened with Isaac Newton. Locked down for a few years with nothing to do except just be really creative. Just think and think and think. Anyway, the whole reason I was talking about Isaac Newton is he invested in the tulip craze, lose money. And I believe he lost money. Let's see. Oh, okay. Oh, South Sea bubble. South right there. I knew he lost money in some sort of mania. So South Sea company bubble where he lost a significant fortune. Yeah. So now he was not, in saying all that, he was really smart, really intelligent, but maybe not really smart, intelligent when it comes to investments. You could say that. And maybe Hutcho's really in smart and wealthy people are more smart and wealthy or smart when it comes to investments. Anyway, so just because someone is really smart doesn't necessarily mean they're going to be really good investors. That's probably the story here. By the way, Alcidion, they released something the other day, which was good, but this is a company where I just think it's always on the cusp. It's always on the cusp of reaching this inflection point, and I think it's getting close now as well. Ooh, it's getting close. I've been on the precipice of buying some shares in Alcidion. Oh, Blacktop Images. I've learned more from you in the last 3 years than anyone else online or real life. Well, yeah, okay, that's thank you. If I've made an impact on one person, just one person, it's worth me doing this channel. I've noticed you don't use fib retracements. Is there any reason for this? I know the jury's out on if it's horoscope for trading or science, but I mean back testing some trader and the 618 just keeps showing up as an important level. I sometimes do look at it, but it's not. I sometimes do look at it, but I just think there's a lot out there. I sort of understand. Where is it in here? It's somewhere in TradingView. Yeah, fib retracements. I sometimes do look at it, but I just haven't done any research to figure out or how reliable it is. Yeah, so the very fact you're doing some research is one step above me. And if you find some really good research that, yeah, maybe this 618 is a really important level, I'd love to hear more about it. But it's something I've looked at but haven't really focused a lot on. Manish Garg, how is Renerve and NXN given potential midterm approvals? So Renerve is a recent listing and NXN. Do I know this one? I don't know. NXN. Nexen. Business update, FDA engagement underway and key appointment. So that was released on the 6th of January. It was not marked price sensitive. Let's have a quick look at this one. Oh no, I wasn't supposed to get rid of that. Dang it. FDA engagement commenced entry into the world's largest maternal health market. Okay, I don't know anything about this company. Feedback expected within approximately 70 days. Commercial financial readiness strengthened. Okay, so Nexen, and I assume the other one is Renerve. Oh, share price down 8%. And I assume that you're right, that they're close to getting FDA approval or something like that. Many ways to play this. The less risky way would be to wait for the approval, and you might lose out on some profit. But the reason that's less risky is because on some occasions, company won't get FDA approval and the share price will plummet. So it all depends on your risk profile. Are you risk averse, risk taker? So like in the past, I probably would have been more of a risk averse type of investor. I would have just waited. But there is possible some credence to, if they have these possible positive catalysts in the future, getting in just before that, with the knowledge that the share price could plunge if it's a negative. If it's negative. So let's have a little chart for both. Let's see if this is happening with Renerve and Nexen. Well, I do remember Renerve share price popping up on the 30th of November, and share price just pulled all the way back down to where it was. So for me, nothing really in the chart to get excited about just yet. And I probably would want the chart to look pretty good before I even think about buying in. And the other one was Nexen. Let's have a look at this chart. Oh, this is a recent listing. That's probably why I don't know much about it. Looks like it's found a low. Yeah, for me, not just yet. It's too recent. For me personally, it's too recent of a listing. It's more of a story stock right now, and I probably just want to wait for this one. I have followed companies, and I've waited 10 years without owning for a positive catalyst. Sometimes it takes a long time to get that positive catalyst. Wazo Frog, hi Neppy, I've been waiting for a while and can't seem to find any info about becoming a member. What am I missing? I have no idea. I wouldn't even know how to become a member because I'm the person who does this channel. But a lot of other people have no problems because how many members do I have? So 108. So a lot of people have found the memberships thingy, whatever. There must be a button somewhere where you become a member, but I can't tell you exactly where that is. I'm sorry, but maybe Sensei can put a link how to become a member. I can't believe it's. I have to go responded. There we go. Oh, I've got to sort this by newest. I hate this. Oh, here we go. Let's go to. There we go. Gee, this is a long video. AUV was Super Resource. They changed their name. Oh, this is one of those instances where a company changes the name, and that's probably why I've never heard of the company. I've definitely heard of Super Resources, and this is what reason I hate when a company changes the name because, yeah, I just hate it. Just keep your name. What's the difference between Super Resources and overvalued metals? I don't know. Maybe it's just me. When do they change their name? Nah, is it worth it? I don't know. I'm just becoming old and becoming more of a whinger. Okay. Oh, this is good insight from Rogol Dawn, who mentions the reason that people don't like this merger is because Glencore's substantial coal portfolio and riskier assets in emerging markets like Africa would be a lot of work for Rio to offload that. Yeah, so Glencore has a lot of copper and aluminium, which is, I think, one of the reasons why Rio wants Glencore's assets, but looks like, yeah, coal and riskier assets. So it also goes against Trott's recent statements of a slimmer, more agile Rio Tinto. Also heard something yesterday that Rio Tinto has had a history of buying at the top of a cycle. Don't know how true that is, but I do know that was a problem of many mining companies over the last few cycles. They bought at the top when they should be buying at the bottom. And the problem is at the bottom, when they're generating a lot of cash flow, people just want returns as dividends. Just want the dividends. Give me my dividends. I personally would prefer growth than getting back dividends. But again, that's at the bottom of the cycle. At the top of the cycle, they're more willing to buy. So the impliedness, is that a word? What this person was implying is we could be at the top of the cycle because Rio Tinto is buying or trying to buy. Don't believe in that. Sensei says, can you look at the charts for SNDK? SNDK, SanDisk or something. Yes, SanDisk. I knew that. I don't know why. Oh, geez. What's happened here? SanDisk. If I was trading this, if I was trading the Nasdaq or the New York Stock Exchange, $55 billion. What's happened here with SanDisk? What a chart. It's run up a lot. It's a recent listing, looks like. Listed, yeah, in February, 1 year ago, and the share price has gone up tenfold since then. Probably the big question is why? What does this company do? But you didn't ask that. You just said, look at the chart. And the chart looks spectacular. And there's a lot of interest in this company right now. STX, don't know this one. Seagate. Oh, do they make SanDisk? Do they make drives, hard drives, that sort of thing? Seagate. I haven't had a pleasant. I did have a really unpleasant experience with a Seagate external hard drive many, many years ago. Chart looks good. So it looks like in this space, if that is true, SanDisk and Seagate are sort of in the same space. $64 billion markup. Both charts look really good right now. So a lot of positive vibes in this space based off these two charts. WDC, is this Western Digital? It is. Oh, we see a bit of a theme here. And the same looking chart. What is happening in this space? These charts look spectacular. Something really positive. There's a lot of tailwinds behind these companies. $68 billion markup. And the last one is TSM. Well, I know this one because I own. I own me some Taiwan semiconductor manufacturing companies. In fact, let's have a look how much the share price has gone up. Ooh, we're talking about a 3.5 bagger. Oh, it's almost a 3.5 bagger. This is one of my favorite buys ever, because the P ratio of Taiwan when I bought it back, Taiwan TSMC, back when I bought was 15. I was like, why is the P ratio so low for this company with the tailwinds behind it? One of my favorite buys ever. And Micron, well, I've already looked at Micron, and this is a company that I've recently bought back into. Not bought back into, I added to. Yeah, so I bought 108 and I added to my position. Yeah, so well, my only problem with this, when you look at the weekly chart, it looks like the run has been spectacular. It looks like it's going up exponentially. But if you have a look at the daily chart, it looks pretty good. Still looks pretty good. And explain why the chart mega growth looks very similar to each other and if it could potentially keep going upward for the next year or so. Well, we have 3 companies there that are fairly similar. So something's happening there, which I can't explain right now. The reason why TSM is going up is because that whole space, semiconductors, a lot of positive vibes in that area. They're getting a lot of business, et cetera, et cetera. They're linked to NVIDIA, that sort of thing. And Micron, I can definitely say why Micron has gone bananas is because their most recent report was spectacular. It's blew expectations out of the water. And then they released guidance for the next quarter. And it was like, whoa, this quarter, if they do achieve it, will be blowing everyone's expectations. Well, it did blow everyone's expectations out of the water. So again, it's all about how, with Micron, how your results compare to expectations. Regodon says, have you checked the chart on Redox recently? Nice trend. No, I haven't. I'm wondering if this is not in my watch list. Oh, this is a beautiful chart. Okay, so beautiful chart. Yeah, share price. I was trading this. It got out on the 20th of February. 1 year ago, I got out. Almost 1 year when they released results. A trend killer event. Got out. Share price went all the way down from 360 on that day to $2. And the trend has changed. Why is this not popping up on my radar? For some reason, this is not in any of my watch lists, and it should be. It's in my trend killer watch list, which I don't look at. I never look at that. So this is a mistake. This is a nice chart. Thank you for that, Rogodorn, because this is exactly the sort of chart I'm looking for. Designation says, is Oceania Healthcare worth a buy and hold for the year 2026? Was 50 cents about a half a year ago. Oceania Healthcare, I believe this is New Zealand. I could be mistaken. And based off the fact that it's listed on the NZX, for some reason, I'm thinking they are Age Healthcare. I don't like the chart. The Australian or the ASX chart is too illiquidly. It's too illiquid. You can see massive spikes in volume and then no volume, but you can see how you get these big drops in one day. That is telling me it's illiquidly traded. Let's have a look at the summary. The buy sell depth is pretty weak. If you could trade this on the New Zealand Stock Exchange, probably that's the place to buy. So let's have a look at the NZX chart. This will be much better. Yeah, much, much better. The trend is nice, but maybe a bit toppish. P ratio 12.29, markup 266.57. Nice little run up. Maybe wait for a bit of a pullback. Has pulled back a little bit. It's an okay chart, but I prefer to buy in at the breakout. And the breakout happened back in October when the share price was 76 cents. And how much upside can you expect from Oceania Healthcare? So the question is, why would you be buying it? Is it a trade? Is it a long-term hold? Is it a high-quality company? Do you like the prospects of the company? That sort of thing. And he says, buy and hold for the year two. Oh, well, that's too difficult because over a 1 year period, it's so hard to know exactly what's going to do well over a 1 year period. So when you're talking about long-term, is it a buy and hold for the next 5 years, or is it just a short-term trade? And maybe you could hold it for a year if it does really well. So that is the timeframes I'm looking at. The short-term trade, which you could buy and sell within a few months, or is it like a 5-10 year hold? For a 1 year period, no idea. Capital South says, hey, would you buy Mesoblast at these prices or wait for a pullback? Again, I can't give advice to you personally. I already own Mesoblast. And I'm going to, for me, okay, if I wasn't owning Mesoblast and I was looking at this as just a trade, I'd wait for a breakout above about 330. So it didn't get above that. This was a perfect day. Share price got to 330, then pulled back. So we saw a bit of selling coming in. Now, it doesn't mean it's failed, but we might see a little bit of buying coming in. Their quarterly results were quite nice, but there's definitely a bit of resistance at that level. We've seen that on Friday. If I was in this for the longer term, well, I am in this for the longer term. So what am I saying? So it all depends on your conviction. Do you see this as a longer term play? If you see this as a longer term play, then buy these prices because the pullback may never happen. Of course, the pullback might happen. You could maybe buy these at $1 if we go into a bear market. Who knows? It all depends on your time frame. Okay. Again, from Capel. I learnt a lot. Thank you. Say in those three examples, did you sell at the top when you saw structure change, or did you wait for confirmation of a change in structure? My problem is that by waiting, we lose a significant amount of profit. Tough call. This also relates to the previous question. Do you add to your position generally or hold off? So I've sort of answered that last bit in an earlier question. When I see a change in structure, I get the first inklings of selling. Gentrack. Let's look at Gentrack, a new company. So this one, we saw a change in structure. So a beautiful uptrend, a beautiful uptrend from the breakout in November 2022. And look at this uptrend. We saw the first signs of stress back in October 2024. And that's where I put sort of a support line. And then they released something positive on the 26th of November, but that share price popped up 28% on that day. And you can see that positive report, or where they released results, I don't know, really the positiveness didn't really last that long. And the share price floundered, went sideways, tested that $9 level again. And at some point here, I got out. I can't remember when, but the structure has definitely changed, probably sometimes after the share price rallied. So it would have been sometime in February 2025. I probably got out. I could tell you, in fact, exactly when I got out. Let's have a look. Let's have a look. Faster transfers, faster US trading, according to Self Wealth. There you go. Let's have a look. Buy orders. Where's all the information? I don't trade through Self Wealth anymore. Transaction history, that's it. Transaction history, there we go. So I sold right in there. So I sold them right in there. So there was a share price rallied in late January, early February, but the rally was fairly weak and the share price pulled back and I got out right about there. So that's when I went, the structure's changing. I think the uptrend has come to an end. Look, the share price could go higher from here, but I'd rather deploy my money. So I got out above $10 and that was a good call. So the answer to this would be, I start to see the structure change and then I start paying more attention to the company. So for Gentrack, I probably wasn't paying much attention for long periods of time. I would look at the chart and move on. But when I see structure starting to change, I start to think about when I'd get out, that sort of thing. And then I just get out. I don't care about losing profits because you can see with Gentrack, I could have got out a little bit later because the share price did go up to $12. But at that point, now the share price might have been going to another uptrend at that point, but then, the chart does look pretty bad since then. And finally, is Peninsula still breaking out or broken? Fantastico. Funny enough, I'll probably be mentioning Peninsula again in tomorrow's or Monday's members only potential trades. I don't mind this one. Share price popped up on the 2nd and 5th of January. Share price hit a resistance level and then has pulled back a little bit. So for me, breaking above 75 cents would be a breakout. So it hasn't broken out. For me, because that's sort of the level it got to in the 16th of October. So I need to see just a breakout of that level, and I want to see a 10-month high. So potential chart is actually looking pretty good. So you might want to wait for confirmation, or you could get in early, anticipating the breakout will happen, because it might. That is all I have for this video. One of my longest ever answer reply videos. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.